Again, a lot of people, they don't keep receipts. So if, or they think a credit card statement is enough. But if you really get a real stickler auditor on your tail, they could potentially say, this isn't substantial. This won't substantiate the expense and throw it out. Right. So
what can I ask a question? Because I'm guilty of that. I know. I mean, a lot of people are, right?
Yeah, who isn't?
Why? Why does that? Because why does that not suffice?
It may suffice just fine. I think it's going to be, if you're audited, it's a case by case.
Because I got news for you, Devin. I got credit card statements are coming to you this year. My tax. I've got some receipts. But why does that not suffice? I mean, to me, it makes sense these days. All the technology we have, it literally says this statement right there. I was at Home Depot. I was at whatever, bought it for this business, the date, everything.
Yeah, I think the easiest way would be like an Amazon, right? Amazon Business, or just say an Amazon. Like if you have an Amazon,
it's all electronic,
right? So you get an Amazon code. Now, the nice thing about Amazon, and this is great, and this is something I'd recommend, is it keeps all of your purchase history.
Yeah.
Right. So you can go in and show all of those receipts are there. They don't fade. They don't disintegrate. Yeah. So that's nice to have. And so if you get audited, you can go into Amazon and pull that up. Hey, I bought a desk for my office, or I bought an office chair, a computer.
Cleaning supplies.
Absolutely. But if you go to Home Depot and you don't have, you throw away that receipt. Sure, it says Home Depot on your credit card, right? But the IRS is going to go, well, how do I know you didn't buy a fire pit or a grill for your home, right? How do I know that's not a grill or a pergola that you put in your backyard that's not right, that you can't write off, right? And instead of, you could have spent thousands of dollars on cleaning supplies at Home Depot.
It was the lumber that I used to build my office this year.
Yeah. IRS. Okay, so hey, listen, if you have the receipts and you can show the office that you've constructed, that's fine.
I sold it.
Right. You are guilty till proven innocent. So again,
sucks,
you can take it to court, but it's going to be very expensive to negotiate, right? So keep that in mind.
It's not like a ticket where you hope the cop doesn't show up and then the case gets dropped. I mean, these guys, they're showing up.
If they show up at your door, they're gonna. I want to caveat that, like, there are different levels, right? Sometimes they'll send you a letter and just say, hey, we want substantiation for a specific line item. And then you give them the receipts for that specific line item and they go about their own way. Well, that happens a lot, like with charity on a personal tax return. You say, hey, I gave the church, $20,000. They might go, well, that's very generous of you, but we don't believe you. And that's what's so nice about when the church gives you that year-end statement.
Yeah.
And so that letter, basically exam that they're giving you is, you just fax them a copy of that statement and then you're good to go. Yeah. Right. So, and they'll be like, oh, okay. Yeah. You paid the church $20,000. Great. Here's your refund, or here's, we're done with this. We're not going to go. It's when they're actually like an in-person audit where they're looking at every single line item, where they're really scrutinizing your income tax return. That's when it gets scary. And that's when they're going to really want that substantiation. So I recommend to everybody, I know it's a pain, but keep the receipts.
Yeah.
No. Again, electronic receipts, Best Buy does, if you have a Best Buy account, they keep track of all your purchases.
I mean, Home Depot does too.
Exactly.
I mean, because I told you, I've done my personal taxes, not the business yet, but like all of my home expenses from Home Depot. You go right. I type my email in at Home Depot. They send me every time I swipe my card. Do you want a email receipt? I try to do it every year because I'm not gonna keep the receipts, to be honest with you. And my wife's all worried about the, what was I saying? The carcinogens that are inside the receipts these days and all this stuff. So
no, doing everything digital I try to do that with everything, like all my subscriptions and all that stuff.
Yeah, because those thermal receipts for fade. But if you can keep it on a backup card, you can keep it on something that's digital. It's nice as long as that media doesn't dissolve. But that's a different podcast.
So what are some of the top things that you see that sets off maybe red flags for the IRS, especially with new businesses? What can set off an audit?
a lot of, the IRS really looks at what's called listed property. So that would be cars, boats, like, hey, I bought myself this
a lot of that down here,
$100,000 boat. And I've had
I put my business name on it. And we're good.
They put their business name on it. And then, the IRS goes, yeah, but you used it 99% for personal use. Maybe you took it on a boat parade and showed off your name once. So you could write off 1% of the boat, not 100%.
But that's up to them to decide that?
No, that's up to us to make a reasonable call on that. But if you get audited, they can override what you decide.
They can say no.
There was
1%.
a realtor. Yeah. There was a realtor down in Miami and Biscayne, off Biscayne.
Right.
Bought a yacht, tried to write it off, and the IRS was like, "Absolutely not. You're on this 99% of the time. It looks like you're out here to have a good time," and had a great tax guy just like you, a great CPA. And they were able to prove that this guy shows his clients what Miami is like from the water, showing them all the high rises that are for sale, showing them all that. That's how he shows.
See, that's a perfect example.
That's how he shows real estate.
But exactly. I actually am familiar with that. But he actually had a business purpose for that vehicle. Just like it's perfectly fine. You could get a Cadillac Escalade as a realtor, and you're showing your clients around in that Cadillac Escalade. It's when you, let's say, work from home and you're a manufacturing business, right? Or let's say you're an internet, you drop ship, right? So there's no travel for you, right?
Yeah.
Everything is just
conference.
Yeah, that'd be one. But let's say, how often do you drive to a conference? That's great. I love the way you're thinking, by the way.
I'm trying to think outside the box.
That's perfect. I mean, that's exactly.
So, I'm the guy that tries to find the loopholes.
So you would be able to take the mileage going to the conference or write off a portion of the car that you took to the conference. Now, let's say you just had this Cadillac Escalade, you only, like, let's say when the IRS comes or you get audited and the mileage on that Escalade is 300 miles for the whole year. Yeah, I went to Orlando for one conference and I brought it back and it stayed in the garage the rest of the time. I never touched it. I never picked my kids up from school in it. We never went to dinner in it. Sure, that's a possibility. You'd probably be fine.
Yeah.
Because the odometer, let's assume you're not messing with the odometer.
Driving backwards home.
Yeah, exactly.
Doing the Ferris Bueller.
Assuming you're not, the odometer is correct. That's a pretty, okay, that's fine. It doesn't make much business sense to own an Escalade to make one trip to a conference, but yeah, that's fine. It's when you mix the business and the personal together. The IRS says you can still write off a portion of the Escalade, right? You can still write off a portion of your vehicle, but you can only write off the portion of the vehicle that was used for business purposes.
It's kind of like the same thing with rent too, isn't it?